Hey everybody, it's Joe Bladek here. I'm just going to wait a little moment and see if we have anybody hop on the call. Today we're going to be talking about the three things that the bank must see in order to get a mortgage. And this is specifically for Canada. And this is after you've gone through a consumer proposal. I'm just going to do some adjustments here. Do it a little better there. Okay, so three things that the bank must see on your credit history after your consumer proposal. Does anybody want to take a stab at it? I can tell you that one thing for sure is that the bank will absolutely be more vigilant in verifying all details on your credit bureau after they see that you've gone through a consumer proposal. As a mortgage broker in Ontario, Canada, I see a lot of folks that go through consumer proposals and come to me after they've gone through the consumer proposal, say 3 or 4 years ago, and they can't get a mortgage through their bank. And they come to me to ask what happened. So the big thing that I find is that there's wrong advice being given. And it starts from when everyone gets into a consumer proposal. The big thing is that the lenders want to see, number one, reestablished credit. And my advice is to start reestablishing your credit ASAP, as soon as possible. And when I say as soon as possible, as soon as you are discharged from your consumer proposal, say if it's Monday, you're discharged, I would like to see you walking in to pick up a credit card application the next day, no later. Because not only do lenders want to see that you have reestablished credit, but they want to see, number two, that you've kept it going for at least 2 years. Yes. A big misconception is that a lot of my clients come to me, they will have just gotten a credit card approved maybe 2 or 3 years after their consumer proposal was discharged, and they have their credit card now, and now they're buying a home. So what the lender is going to see is they're going to see, well, you went through a discharge in say 2 or 3 years ago, say 3 years ago. We have no history since your poor history in the consumer proposal. And now we only have this new credit card, which is not enough history because they want to see an elapse of time pass before any sort of mortgage approval is issued. So what we see mainly happening is those clients have to go to other avenues to buy a home, such as rent to own and other more riskier ways of getting into a home. So the big thing is reestablish credit, and that the second thing is that the lenders want to see it done for 2 years. And the third thing is that they want to make sure absolutely positively that your credit over those 2 years is squeaky clean. If there will be a missed payment anywhere in that 2 years, no matter what the excuse, you will have your mortgage broker or your banker asking you many questions. So keep it squeaky clean and you'll be fine. I had a client actually, they went through a consumer proposal, for example, and they opened up a few credit cards. They kept their spending low, so they were able to pay off their credit card at the end of every month. And after 3 years, they were able to buy a home with the best interest rates after they got discharged from the consumer proposal, and they used 5% down. So that's fantastic. Can't get any better than that. So what does it mean to have a reestablished credit? Well, I'll talk about that a little bit more in depth in another video in the future. But reestablished credit for most banks and lenders these days in Canada means 2 active trade lines with a minimum of 2 years in length each, with a minimum borrowing limit of at least $2,000. Now, I have seen some lenders increase this recently to $2,500 of a minimum, but I would say that most say are 2,000 still. However, in the future, we'll probably see the rest of them jump on board to raising your limit to 2,500. And make sure to keep it squeaky clean. I'll go in depth more so on how to do this in another video, but essentially, I always break it down to the 2-2-2 rule. And that means 2 credit cards for a minimum of 2 years with a minimum balance of $2,000. And if you can follow that rule, after you get your consumer proposal discharged, you'll be absolutely fine in getting a mortgage. The last thing you want to do is buy a home after you've been discharged from a consumer proposal and worked hard not to accumulate any other debt, and realize that the only thing that is keeping you from your home or your dream home at this moment is the fact that you didn't open up that credit card 2 years ago, rather you opened it up now. So do yourself a favor. If you are in a consumer proposal, or if you've been discharged from a consumer proposal recently or are coming up to a discharge, plan to make sure that you get your credit cards activated as soon as possible after discharge to make sure that you set yourself up for success in the future. If you have any questions, my name is Joe Bladek. I am a mortgage broker in Ontario, Canada, and my information to contact me will be in the video description links below. And I look forward to helping you with your consumer proposal, getting your mortgage set up, or any questions you may have. Thanks again for watching, and if there's no other questions, I'll take off right now. Okay, thanks everybody.